Let's get back to those mortgage rates. They did dip below 7% for the first time in over a month. So is it time for buyers who were on the sidelines to jump back in the game? Joining us now, we've got Melissa Cohn, the Regional Vice President of William Raveis Mortgage, joining us here. Great to have you here with us, Melissa. So people naturally hear, oh, wait, we're back below 7%. Is this the time to strike?
Well, the answer to that in my eyes is yes, because as rates continue to drop, as we hope they will through the year, more buyers are going to come back into the marketplace. So if you want to be able to take advantage of where price points are today, then now is the time to buy and take advantage of these rates. When rates are lower, more buyers will come back into the marketplace because of the increased affordability, and prices are likely to go up.
Not to disagree with you at all, but to merely ask the question, does it matter if people are going to just look to refinance later on down the line anyway?
If you think about it, it's really a question of doing the math. You know, if you have to pay $300 or $400 a month more on a mortgage today, but you would have to pay $10,000 or $20,000 more for that house in a year, $400 a month is $5,000 a year. It's probably cheaper to buy now and then refinance next year.
Certainly. Okay, so where could some of the hot spots really emerge based on where we've seen some of the buying activity or bidding activity still remain strong?
I've seen a lot of sort of in the over $1 million price point. There seems to be a lot of activity there, higher price point, buyers that have greater income willing to step in and pay the higher mortgage rates today to take advantage of what they feel are lower real estate prices, in today's market. There are also a lot of people that are just moving. People who are relocating for work, people who with life cycles are having kids. They can no longer stay in their smaller home and need to move. And those people are moving.
We saw in the data from Freddie Mac that although this week's data on previously owned home sales, so existing home sales, showed a decline, total inventory of both new and existing homes is up. And focusing in on that new homes elements too, as that's taking on even more of a percentage than we've seen on historical standards and averages of the overall home buying market. How does that alleviate now some of the pressure on pricing?
Well, what a lot of these new home builders are doing is that they are offering incentives with regards to the financing. They're offering to pay points to buy down their rates, offering a lower initial rate, making it more affordable for someone to buy into these new homes. If you're buying an existing home, a seller doesn't have the same ability necessarily to give you a lower rate for your mortgage.
With that in mind, and we're taking a look at some of where home sales fell in April on screen, according to the NAR and Census Bureau data. One of the other areas that a lot of home owners are trying to figure out is when does it feel like the right time to list, especially as they're tracking mortgage rates as well?
Well, that's a really good question. If you are going to be able to, do you need to sell now or can you wait? If you think that rates will really come down strongly over the course of the next year, as we all hope they will, and prices will go up, if you can wait, do you want to wait to list? If you're going to be moving and you have a low interest rate, you have to find the home at the right price. So if you're going to want to buy lower today, you're going to have to sell today. And it's really just a question of where you're going to find that happy medium for you as a seller, because as a seller, you're probably going to be a buyer as well.
And just lastly, renting versus buying right now with mortgage rates, sure, coming down below 7%, but still sitting right now at a 30-year 6.94. Does that kind of play into, for renters out there, does that to you signal that we could see people come off the sideline in droves who are currently renting?
I mean, the answer to that should be yes. And if you buy now today and you expect that mortgage rates, let's say over the course of the next 2 years, could be as much as 2% lower than they are today, then the cost of that home ownership will only decline over the course of the next few years, and you'll have the ability to refinance and to lock into a much lower rate. Rental, when you rent, you have no equity. All you're doing is you're basically, you're giving your money to your landlord and you're not building any equity or investment for yourself.
Yeah. Well, thanks for reminding me. Melissa Cohn, who is the Regional Vice President of William Raveis Mortgage. Thanks so much.